Good morning, everyone. Welcome to Alma Markets. My name is Chris. Today's focus is going to be on strategy and looking at the Forex market, but we can add a few instruments as well, like commodities and some stock indices. Before we look at the live charts, though, please be aware of these disclaimers. First of all, the fact that this webinar is shown to a global audience but may not be suitable for everyone. Take a look at this link, select your country of residence, and contact an appropriate entity to find out if it is suitable for you and other details. Also, please be aware that trading for exchange and global financial markets in general are considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. Plus, you're aware of the risk involved when trading. All right, before we dive into the charts, as always, I want to make you aware of the fact that Alma Markets has a lot of tech things going on. We got MT4 Supreme Edition, a lot of extra features, including money management, alarm managers, correlation matrices, and recently, about I think 4 to 8 weeks ago, time seems to go faster than I probably imagined, but we introduced here with Alma Markets the web trader, in fact, so you can trade through your browser. You don't need to download the software. You can use this window on a device. Makes it easier to trade and manage the trades. Also, would like to take a look at this calendar and take a look what's going on. We got Aussie balance coming in negative. We got a consumer confidence negative on the yen. We got an ECB meeting. We have some news throughout the day, as you can see, a lot of news, but ADP is the red one, together with PMI on the US. Tomorrow we got a Bank of England rate decision. On Friday we have non-farm payrolls. All very interesting, I think, especially in today's, let's say, economic environment. I think, at least, that all these data seem to be perhaps more interesting than, let's say, any regular point in time. So let's see how the direction of 2016 will be when we look at these data that's coming out from January and February. All right, let's see. Quick look at the heat map. All right, we got a couple of euros here and Aussies losing. Euro New Zealand up and Euro odd up, pound odd up, Euro CAD up. Those are big movers, but look at this one here. Also the odd yen, that's really impressive, right? We don't see typically many pairs go beyond 1%, in fact, right? 1% is already on the high side. So we see two pairs, no, not that, more pairs. We see 8 pairs above or below the 1%. So it's a lot of volatility, a lot of movement on the yen as well. We'll take a look at the yen and see what happened there. Biggest movers are therefore, well, not the yen even, interesting enough, coming in third, but New Zealand and the pound again, of course. All right, we'll take a look at some of those crosses then in that case. Let's see, sentiment. Here you can see gold and the euro dollar quite strongly short at the moment on the euro dollar. Pound is iffy, is 50-50. Gold is short. On New Zealand long, most traders are pound yen long. All right. All right, enough said about that. Let's move on. Good morning, Caitlin. Good to see you. Hope everyone had some good trading so far this week. Euro dollar, well, nothing really happened. Let's see. I think yesterday we were about the same price level. In fact, we did get that small push up as we were analyzing yesterday, and the fact that it could then in this zone hit some resistance, and that did happen. It just was not too much movement. In fact, I think, let me check where we were exactly yesterday. We were here. So yeah, we went up 30 pips only. Hit the 272 target when placing a fib on this move. hit the 272 target, moved away, retested the top, and then it seems to be falling again. So this could be a turn at resistance. I maybe would have expected a tad further, maybe to retest 109.75 up in here. I see I'm missing my drawing tool. Hang on, folks. Let me just quickly grab my drawing tool there. So I thought maybe that the price would go a tad higher than it did, but it didn't get up to 109.75, and now it's showing a turnaround. So that could be a reason to expect price maybe to make a bit of a bearish move down. It seems to be rejection, being rejected at resistance here. So there could be a small trade down instead of up today, I would say, compared to yesterday. All right. I got my drawing tool now. So we can get rid of this fib. I can put the fib on the entire upside here now. And let me get rid of this daily fib. Sorry about that. Let me get rid of this one here. All right, so we got these blue lines indicating the wedge, the bigger sideways move. We got the orange indicating long-term resistance. We got green as support. So obviously we're stuck in a triangle, as we've said already the last 2 months. And we could be heading back towards the bottom, as we've seen already regularly, right? We've seen a bounce here. We've seen a bounce here. We've seen a bounce here. So it could be again a bouncing spot. Actually, price has already bounced, but the question is how far will it move down? And it could, from my point of view, it could definitely go to the 78.6 fib or 61.8 fib. Now, is it a fantastic trade? Well, it's okay-ish. I mean, I'm not jumping for joy for a triangle that is getting smaller and smaller like this, but could be okay. Let me take a look at where the pivot points are. We'll get new pivot points in about 8 minutes. So we'll know a bit more about that in just a second. But considering, let's take a look at 4-hour quickly. What do we got here? Okay, we got 1, 2, 3, fourth candle. Last one was bearish, not breaking this top. Could be indeed a signal. Some couple of bearish candles here. Bearish candles seem to be dominating, I would say, at this moment. Although we're in a range, so everything can be quite choppy. Let's take a look at yesterday's candle. Was bullish, but very small, and in fact, 3 days ago was still a dominating engulfing twin here. Anyhow, the question is does it have any value because of this entire sideways move? So that's another thing to think about. Let's take a look at the 15. Moving averages are bullishly aligned, and we could probably see support still from this point of view. So I would take a look again in 10 minutes or so when the new hour starts and see. I think that only makes sense if we clearly see a break, pull back, and continue. I wouldn't be shorting here, just in case this is a bullish triangle. It's still within a wedge like this with an impulse prior to it. So I don't see enough evidence to short right now, but it could be okay if we see a move down. Let's take a look where the pivot point is and see if there's any bearish sentiment in the rest of the day. The opposite, well, what if price breaks through this resistance? Well, we could see a move up to 109.75, as I said earlier in the webinar. There's not much space though. There's only about 40 pips here. Looks very choppy. I will move on to the pound USD and see if we can find something else. Price bouncing not off the 38.2 fib, but off the 50, roughly, or the 61.8. In any case, if you look at, from a wave perspective, if this was a wave 1 like I had yesterday, and this was a wave 2, and this is a wave 3, then it shouldn't break below this top. It didn't. It still bounced off that level. But it didn't really go out too far. The bounce was shallow. It went up to 144.40-ish, didn't go up to 145. Missed that target. If anyone did take the bullish bounce trade off of this pin bar, for instance, I would definitely move it at break even or below this bottom. Let's get rid of this fib at the moment. And let's clean up the chart a bit compared to what I was showing yesterday. This is a good fib, but won't use it for the 1 hour. So if we look at the hourly, we're in this channel to the upside. That could be an easily considered a bear flag when looking at the 4-hour chart. Why? Because we had an impulse, as we know here, and now we're kind of correcting that, right? Like with the structure like this. So obviously, if we break that bottom, boom, we got a downtrend continuation, we got a bear flag break. If we don't break it, we could be in this sideways bear flag for quite a while. We might even move up to the 38.2 fib and minus 61.8 target at around 146.25. So what next? Well, if we're right at the trend line, we're right at the top of that channel. So it wouldn't be so surprising to see a bounce there as well to the downside, just like the euro dollar. Retest the bottom and then bounce again, perhaps up to that target. Same thing as yesterday. So from that point of view, if we zoom into the hourly, you can see kind of a wedge as well. So here too, we have momentum to the upside, but we have also obviously still that downtrend in play. Although you might speculate if this is already the start of an uptrend, I wouldn't go that far. If I look at the daily, it's still heavily in a retracement mode. Right, so the trend is not up; it's retracement mode. Trend is still down, but it's not moving down at the moment. It's just retracing, pausing at the moment. So we have a bullish momentum, but price is definitely in a resistance spot. So what I'm looking for, same like the euro dollar, I would say, we're going to have on a 30 or 50-minute chart, got to see some break. Not sure how to draw the trend lines here, but obviously you got this triangle like this going on. Something like this, right? And we could even draw a trend line like this. And from that point of view, the triangle seems to be breaking. But the thing is, breaks like this are okay if the moving averages are aligned as well. But clearly the moving averages are up, bullishly aligned. Why? Because we had an impulse here. So I want a bit more, because of that, I want more evidence that price is breaking. So what I probably would like to see in 3 minutes, we'll get more info on the pivot point as well. I would like to see price really make a bit of an acceleration, but then also a mini bear flag or triangle and then a break follow through. Then I think that there is a higher chance that this has been completed, this upside, and we're starting a new downside to retest all the way to this bottom. In that case, I think it makes sense to put a fib from here to here and look for the 61.8 or the 78.6, max 88.6. Could be even the 50. Honestly, could be the 52. 143. Any of these fibs. I have to keep an eye on how much impulse there is. So if it moves down, oh, sorry about that. Let's see. So if it moves down like this, got to see how, which fib gets the reaction. There's a confluence lower at the trend line. So I'm inclined to say it could go quite deep. But let's take a look at the pivots as well in 2 minutes. So we'll get back to this one. All right. Well, dollar yen is still not a big fan of it. It's bouncing, but there's a lot of momentum now to the downside. I just don't like it. I don't like the fact that there's momentum up, there's momentum down. We're at support, but we're at resistance. The dollar yen is doing everything and anything. So I don't really see a trade that has an edge on the dollar yen. If you do, I would be curious to take a look at it. We can evaluate it, but I don't see it. Pound yen? Pound yen, okay, went bounced off this trend line we had, and indeed the reversal trade that we talked about off of these fibs happened, and bounced off that fib, moved down, and went right to the target that we were talking about as well, right? The pending order stuff at 172, which was basically placed at the 38.2 and minus 61.8 confluence. Although I said if I use a pending, I think the best is to put a stop loss here because I don't know where it exactly stops. Now in this case, we're kind of lucky because it stopped right at the level that we had in mind, 171.94. So in this case, in retrospect, a very tight stop loss could have worked, but we never know. So it stopped pretty much on the pending at 172 and was up about 100 pips. Now the risk was about 85. So there is already a one-to-one trade to be grabbed here, but is that something that is desirable, or is there more, to it? Is there more potential for this bounce and pending order that we discussed yesterday? Let's take a look. I think that considering the fact that price is in a channel like this, if we get rid of this, or let me just make this a bit different color here, 1 second. Okay, so if we focus on the orange lines here, we're in a bigger channel to the upside on the pound yen. And in fact, one could definitely say already uptrend on the 4-hour chart, right? Daily, this could be your retracement, but we never know how far that could go. So yeah, considering we're at the bottom of this channel, I would say I think it's good to aim for higher. I mean, there's nothing wrong with the one-to-one, but I don't think it's something that needs to be taken here. I think it could make sense just to stay in this trade, and I would say conservatively, if we do get a head and shoulders, then we have to consider this left level here at 174. That would be a 2-to-1 trade roughly, just a tad more actually. Let's see, 85. Yeah, 2.5-to-1, I guess. I think that's a good trade. Or alternatively, if you think it will break to that level or hope for that, there's a way also of trail stopping these 4-hour candles, the lows of those candles. That could be added as well. I do that often, but I'm looking for good candles. Like for instance, this candle here. If I'm in the long, a small doji like that would not convince me to use that low. I would probably most likely stick to this candle or even this candle as a trail. Depends. Any good 4-hour candle could be worth trailing and seeing how far it could push, because yes, this pink line could be the turning spot, but how about if it goes to target? Pound yen can move a lot. It's a big mover, and that target might not happen today, but it could get up to, who knows? Pound yen, but point is that we never know. Pound yen can really post a 4-hour candle like that and a small one like that, and before you know it, it is at 175.50. And then it would be 4-to-1 trade already. So if you feel more conservative, I would go for this as a target. If you feel like maybe a bit more for a larger target, then I would aim for this one. And trail stop, probably in both cases, trail stop 4-hour lows. Sorry. If you're not in that trade that I was talking about yesterday, let's see. Well, this 4-hour candle could be worth some information, because if this 4-hour candle closes like this, that could be a bounce, basically a signal of a bounce at the beginning of the trend line. What probably would be best is to wait for a bit of retracement of that 4-hour candle. Go for a stop loss either below here or below the candle low. Get an entry, yeah, let's say about halfway, roughly, just a tad above it probably, and target this, or well, the targets we already talked about, or higher, right? So let's see, but this would have to be a bullish candle. This would have to be a candle with a close near the high, I would say, not that does not have half a wick at least on top. That could be a way to enter that. Let's see. In that case, there could be an entry. Let's take a look. Let's see, quick calculation here. 81 pips at the moment. So it would be around 172.70 probably. Stop loss could be around 65. Could be a 2-to-1 trade if a stop loss is placed below this candle low. That could be one way of catching a bounce here, here, and here. But let's see, this obviously depends on how this candle closes. If you're already in the trade, then definitely I'm going to recommend to move that right here. In my vision, there's no need to keep that risk on the table, obviously. With a stop loss here, right, I'm not sure if I mentioned it already, there's still 85 pips. Risk on the table, that's not needed, I think, personally. Especially now that we got the bounce. I don't think it makes any sense to see it fall like this and hope for a bounce again. And no, if it moves down now, it could be breaking this channel, actually. Don't want to stay in that trade when it's breaking this channel, this 4-hour channel, remember? So if it breaks that, no, not interested in staying in and seeing if it can bounce, because then the bears are back in control, out of question. So stop loss could be at break even or just below this, just a tad below this. But I think break even is fine. No need to risk, I think, on this trade. But if if we go below this bottom, then there's only about I guess 12% of the original risk on the table anyhow. So it's either 1/8 or nothing. There was one more pending order we talked about yesterday. That's the dollar CAD, and that one is kind of going against us at the moment. Let's see. It's dropping at the moment. It was a few hours ago. There was a bit of a rally here, but now it's kind of dying down. But there is a good bullish candle here. So I would not lose hope on this one. And a clear break of this channel to the downside. So I think there's a good chance that this is just a retracement. And let's see. A good chance that this could be a bouncing spot. I think it should be fine. Let's see. I think a stop loss below this bottom should be enough at this moment. If this is going to bounce, I'm not expecting it to break below 140, right? Because 140 psychological level, it's about halfway the upside here. We got a support trend line coming in that used to be resistance. We have this candle low here, bullish daily candle. So I would expect any bounce above 140 for continuation. So it could be a setup right now, a long right here with the stop loss below, a bounce trade, a continuation trade. Bullishly aligned moving averages at the moment. So there are a couple of ways that this can be tackled. If you're in the trade, then the stop loss is I think below 140. If you're not in the trade, then I think there are a couple of ways. One could be, well, right now, in fact, or just a few minutes ago, we talked about it, just a market order. The other one could be a break of this trend line, but that's a bit steep. It's not easy to trade. So I think that maybe an easier way would be on a 5-minute chart to just let it go up and make a hook back like this, and then go for a long right in here. When 5 to 6 candles don't break this bottom, because we are having a momentum at this moment on the 5-minute chart, right? So if it breaks the bottom, it keeps pushing that momentum. But if it doesn't, 5 to 6 candles, then there's going to be probably a bigger rebound. And when the momentum is lost on a 5-minute chart, then we might see the bigger move up continue here. This could just be a retracement for more upside. And the target, well, price could go up, could rally. Let's take a look where the pivot is. Ah, 140. It's bouncing off the pivot actually. 140. So with that in mind, our M1 is 141.33. Let's see. Well, probably the next fib, right? 142.08. That could be the next target. Let's get rid of this. Other signals, a big wick on the 4-hour candle here, or engulfing twins on the hourly. Any of that could be a bullish reaction and considered a bullish reaction. Hook back on the 15-minute chart, 5-minute chart, hook back. So we can keep it on the 5 minutes. We got enough time to keep an eye on the 5-minute chart. Let's see if we get to bounce on the dollar CAD. All right. Euro dollar is bouncing off that trend line we just had. Let's take a look at the euro dollar, pound dollar now with the different levels in mind. Prices around the pivot as we speak with the euro dollar. The pound USD keeps falling. The pound USD pivot is 143.90, so it's about right here, in fact. So let's see if it can push through the pivot point. If it does, it's probably going to bounce at one point like this. It's going to fall, make a bit of a bounce, and then the next break I think could be okay-ish for a move to the bottom of that channel. And it could be the same for the euro dollar. Pound yen is moving lower. That's because, let's take a look. Why actually pound? Maybe because pound is moving lower. Yes. So let's see. Maybe it doesn't have enough momentum to get to the target. Who knows, right? The first target at least. And this is just the beginning of a bigger correction. But in that case, at least nothing is lost, right? And it's possible that this channel could break, but let's see. It has to break, has to prove itself. All right, Aussie. Well, this could be a pullback. However, I would like to see, let's analyze it a bit. The moving averages are flat here. We got a break, and we're right back in the channel. Is this a false break? Is this going to be going back into the channel like this? Or is this indeed a turnaround level? I think that both are possible. I would like to see price action, in fact, see how it responds there. Because this is a trend line that only has 2 hits. So it's not an established trend line as yet. So the break, although it's some value and some information, it's not everything either. On a 1-hour chart, we can see that that's a bit different. We got 4 hits on this one, or 3 hits at least. And we had a break of this trend line as well. And we're below that low that I mentioned, which is an important level. So from that point of view, it looks bearish. We broke that low that's important for the retracement to be considered over. So this could be over. This retracement, this channel. Remember that we were talking about yesterday is the fact that this is bearish momentum. We got a triangle here and we broke that triangle. And that this could be a hook back to the 61.8 fib and then start falling again. We hooked back to the 61.8 indeed. We broke, pull back, Now, will we get the continuation? Who knows? But obviously, yesterday's candle was very bearish, and we broke that support level. So I do think that this is actually starting to look a bit better than maybe on the 4-hour chart. We got one lower high, we got a lower low already. So not looking that bad, I would say. Let's see. On a 1-hour chart, we got bullish candles like this still. So I think if we want to see confirmation that this is indeed the pullback within, I know there are a lot of layers here, but we're looking basically at a pullback here, and whether this is a continuation, remember? So is this indeed within that continuation a break, and is this the pullback within that continuation, right? If you see the red and blue letters there. And waiting for either a 1-hour bearish candle here or a break of this low. What level is that? 70.30. I think would be confirmations of that. We got a bit of a momentum on the 5-minute chart, and we never know how far that momentum can last. That's the thing. Another way could be, let's keep an eye on the 5-minute chart, see if this momentum is over. And that could be then a reason to see a turnaround. Bullish channel there. Or a 15-minute hook back like this. All right. Yeah, so I think it's an interesting spot. It definitely could be a turnaround spot, and continue. The EMAs I'm using are 21 EMA and 144. When I have these two EMAs on, that's 21 EMA close and 144 EMA close. And Caitlin's adding that now it uses 2 hits for a trend line. And yeah, nothing against 2 hits either. By the way, there's just a difference. Like I call it a potential trend line. I guess it's a small difference. I personally, Caitlin says, by the way, that he feels more comfortable when 3 hits are made. And in general, I agree with you. There's a couple of occasions where I don't mind trading a break out below a trend line with 2 hits. Is if there's a strong momentum going on, it's either falling a lot or rising a lot. And on a smaller time frame, or we get like some kind of smaller correction like this, and we got a trend line with 2 hits. In that case, I think it's okay. That's the only time I really don't mind. Other times, I agree with you. You could find two hit trend lines a lot indeed. So in this specific circumstance, the price might just pause very shortly and then continue, and then I think it's fine. But other cases, I would agree with you. Then you can find many of them, and especially if you're trading a bounce, I would say. All right, Euro Yen did not make that last upside to the resistance zone that I was kind of hoping for it would go to, because I thought that could be a good shorting zone, but it might still do that. Looks like the master candle, as Ned will call it, I think here, still controlling the market. So from that point of view, it looks more like a bullish retracement of that master candle. 61.8 fib. After hitting the 50, now hitting the 61.8. So it could be more of a bounce, but I don't like the yen I mean, the dollar yen, I don't know. Your dollar's in a triangle. Dollar yen is bouncing. I'm not sure if this is the best moment. I'm not a big fan of the euro yen, considering that it's so close to resistance as well. not that interesting for me. I like the Aussie a bit better, the dollar CAD a bit better. Kiwi talked about the break of this resistance and the fact it could go to the next fib, and it's halfway to the next fib already. Yesterday it did break this trend line. I think price was at that trend line, wasn't it? Yep, I think so. Said that was a reversal trade actually because the 4 hour is up. But despite that, did make it down, hit the support, and then turn back up. And got a bit of a, what I was saying yesterday is want to break, a bit of a pullback and continue. And this bull flag really is that's that signal. And this is an example then I would say of a scenario where I don't mind having a trend line with 2 hits because of the momentum in this case. So I think that trade is past us now. If you're in it, great. I think, well, depending how you took it, I guess you could. I'm not exactly sure where, maybe below this flag you could put the stop loss. If you're not, then I wouldn't trade it anymore, and I would try to see if there's a rejection at the 50 fib for more downside. In fact, at the trend line as well. Confluence, of course, between the -272 target and the 50 fib, like always, and that could be a strong resistance together with the trend line there. So wouldn't look for upside. That happened earlier today. We got a break, bounce, break. Those could have been trades, but now we're halfway. I would not trade it anymore unless there's a rejection here. So yeah, the New Zealand US dollar is called the Kiwi, and Caitlin has a funny story here saying that when he first heard about the Kiwi, he actually thought that traders could trade the kiwi fruit as a commodity. That's funny. That's a good story. We should have more fruits here. We got these commodities like oil and silver and gold, but no apples and oranges and kiwis indeed. Could be a good addition. Euro pound is very messy, so let's simplify it. Well, we got bullish candle last month. Bit of a pause on the weekly. Triangle going on now on the daily. I think probably these trend lines are the most important, I would say. I think we need to break above the 21 EMA and these resistance trend lines. Break to the upside would be with the trend. Break to the downside, we can see a bigger correction, and perhaps price falling down to the -272 target or the -61.8 target. And here we're in bullish territory. And I don't really see anything that I would like to trade within that zone. Well, perhaps I mean, one could speculate on a continuation of the trend by trying to take a long in here. still, I think resistance is pretty close. I'm not sure about that. And from a shorting point of view, I'm not a big fan of it either, just because it's in a triangle and we got bullish moving averages. Don't like that personally either. So I just wait for one of these two supports to break. I think if it breaks to the upside, it's a bit easier to trade on a lower time frame and seek for a continuation. If it breaks on a higher time frame, sorry, if it breaks to the downside, excuse me, then it's a reversal trade. It doesn't seem that easy, but it would have to show momentum here and a small triangle, I would say, on a lower time frame, and then there's some space there, but not that easy. All right, pound yen talked about the fact that it's hooking back to resistance yesterday, but that might not be the bouncing spot because of the momentum that's going on the lower time frame. It could push higher, and if that happened, it kept pushing higher, and it didn't respect that resistance. And that's why I was saying I would like to see a break of this support as a confirmation that it is turning at this resistance. That didn't happen, and it kept pushing higher, actually breaking this fib. Sorry, let's take this off then. All right. All right. So we can put a fib on perhaps this entire downside. Let's see, stopping in the middle of nowhere. All right, we're still in this downtrend channel. Prices could still be hooking roughly back to that support trend line, which could be resistance. Although it went a bit above it on the 4-hour chart. Well, it could be obviously a breakout to the downside. But this is a very steep trend line. On an hourly, it's very steep. 15-minute chart, maybe not, but moving averages are still bullishly aligned, as you can see. So I would probably not take that trade right here, but I would. Let me take a look at the pivot points. I personally don't think that trading here makes sense. Let's see if it reaches to 354. No, I need to see it below this. I would really need to see a break, a pullback maybe to that level, and a fall. Not too sure about this one. Looks kind of messy and in the middle of nowhere. But could be following the pound odd. I mean, if it breaks support, it could, this could still be a hook back, obviously, for more downside. But all in all, this looks choppy. That's why. And we broke out of this resistance as well. So not that big of a fan. Camarilla points, we can take a look at that. Let's see where they are. L4 and L3. So you can see bullish moving averages at the moment. Prices above the pivot and L3. So I think that would probably be the same for the pound odd. Let's take a look. Yeah, pivot in L3. $203.35. That's what I was talking about. 203.35. That's the L4. It's also the M2. So probably would like to see price hit this, show a bit of a triangle, and then continue. And that could be a trade to the downside right in here between L4 and L5. But other than that, I don't see downside is too early in my opinion, despite the momentum that's being showed here. But there's bearish price action, but things are still bullishly aligned. That's why. So it could be a bouncing spot as well, but we don't see price action confirming that. We see a very strong bearish candle. So that makes the support not so important at the moment, at least. Rather wait on not going along against that momentum, but don't want to go short either because we see support close by. Yeah. All right. So there were a couple of crosses that we were looking at, right? The odd yen that really moved a lot. Let's just take a look for the fun of it. A lot of movement on those. So what happened? Oh, that's a bit of old. So let's take a look at a new one. Let's get a bit of a feeling for this chart because I haven't looked recently. So let's take a look at the monthly. We see a big wick. Last month, we see downtrend on the monthly though as well. Weekly chart, we see prices in a channel to the downside. Two trend lines we can probably two trend lines we can use. Let's see. Oh, anyhow, something like that. So downtrend trend on the weekly, daily. That was a big up move, but then a big rejection yesterday as well. At the 78.6 fib. All right, we got a big channel to the upside on the 4-hour chart, but we know that that upside channel on the 4-hour chart could be easily a retracement on the daily. Why? Because we got a weekly downtrend channel. We had downside momentum on the daily as well. Look at that. So weekly down, daily down, 4-hour up, but retracing perhaps because yesterday was a bearish candle, as you can see. And this is trend line with 2 hits. So if we move that like this, we got a clear break. This trend line has 3 hits. And also starts to look a bit more like a rising wedge like that, which is a bearish chart pattern, right? Rising wedge chart pattern and a reversal signal. We got to break up that reversal signal. And we bounced off the 38.2 fib. All right, well, that could be, if we put a fib like this, let me change the color, that could be a hook back after the break. Let's make this orange. There we go. Because we got a 78.6 fib, we have what looks like a zigzag to me. We have a rising wedge. We got a downtrend on the weekly. We got a bearish momentum. We got a bearish day yesterday. So if we put a fib on that daily candle, this would be more of a retracement hook back for more downside. I think that's a pretty decent chance. And although you never know, this could be a retracement obviously from upside. Therefore, and this could be just widening the channel. That's something we have to be aware of. That's always possible. Although drawing a channel like this is not giving us 3 hits. This would give us 3 hits like that. So it could widen the channel like that, right? So we got to be aware that this could be a bounce too, but this could be a hook back too. So keeping an eye on these levels to see if there's any signs of a rejection. Same like the dollar yen, I would think. It could be very, very good, I think, because if we do get a rejection, then price could make a weakness here and then start falling to the next support level, which could be, for instance, the 50 fib at 82.80. Yeah, so I think keeping an eye on these fibs to see if there's a bounce, looking at the price action to see if there's some candlestick pattern that shows a bounce, I think could be a good plan. I think on the odd yen, we had a great bearish day yesterday, so could be a very good reason to see a hook back and more downside. Okay, these are one of these exotics that were on the volatility map, the market heat map, right? That had a lot of movement. So that's why I'm looking at it. Don't look at it too often, but that makes sense. I think if there's a lot of movement, then it could be a good trade setup. Any other currency pair you have in mind that you would like to take a look at? Any other cross or exotic that you think could be good? DAX had a down day yesterday and is retesting this bottom again. Didn't really move up too far, hit the 38.2 fib. Now moving down already, but still could expand the correction one more time up to the 50 fib. There's that possibility. Let's see. Gold is moving up, but it looks pretty slow and sluggish so far, reaching a rough resistance zone. For 1150 is a minus 61.8 target. That could be a nice one. Got a trend line, a target there, resistance levels from the left. Well, obviously this is not moving and it's kind of a sideways zone after bearish impulse in a downtrend. I think we have to be careful too with this one because it could pop up to resistance and then find rejection. 38.2 fib. So I don't think it's a good instrument to trade at the moment, personally. because I would still be cautious of the spike here and then perhaps turn. Market likes to make these kind of, I think, kind of movements with consolidation zones. Consolidation zones, sometimes you will see an opposite break before the trend continues. So that's something to always consider, at least. Especially, I would say, on higher time frames, actually. Well, maybe on all time frames, actually. Well, anyhow, euro dollar still in this triangle. Pound USD is kind of pausing a bit. Good momentum down, but catching its breath at this moment and bouncing off the pivot. Was this enough downside to consider that a break? And I would say no, not yet at least. Depending on how this 1 hour candle looks like, maybe we'd like to see at least one more candle before considering the move down. I don't think it's enough evidence that this is still in the triangle here, still keeping its head high, still right at the top of this resistance. Not enough evidence for me to take a trade there. Pound yen challenged the support level again, but is bouncing just a tad. Let's see how this 4 hour candle closes. That's basically, I would say, the key for potential new trades, but also even for current traders that are in that trade. If there's a big wick, maybe, well, now the risk is at zero, so it doesn't matter. AUD USD, no significant turn as yet. 1, 2, 3, 4, 5, 6, 7, 8 candles. This could be the turning spot on the AUD USD right now. But it's a 5-minute chart, so it's difficult to say because the momentum here could still, this channel is still existing. So that's a bit of a risky one. I would say maybe 15 minutes could be a bit better to see if there's a break and a pullback like this. This could easily be consolidation for more upside as well. So I would probably rather wait for the channel to break and then the next break. But this could be a good turnaround spot on the AUD USD. And this could be a good turnaround for the dollar CAD too. Same story. This could also be a bit of a pause just for more downside. We've got still this channel going on the 5. That impulse is still valid. So maybe, I think 15-minute chart could be a bit better. See if we get the break. If we get break above this high, then it could be worth looking on the 5-minute chart for a pullback. And that could be the same for this AUD USD. Let's see, 15. Break below this bottom. All right, I think that's it at the moment. I think the Aussie Q and the Aussie and the Loonie, the CAD, probably the best one set up for a continuation. Cable, maybe to the downside later today. To the upside, really don't know. I mean, it would have to break above these resistances. And then there's, maybe some potential upside to 145, 145, 25, which could be resistance again, by the way. Euro dollar, small upside, small downside, not much space there. Kiwi, resistance at 66, 25, 66 even. AUD yen, I like the potential bounce back down Euro odd and pound odd, maybe. Well, not that excited about those, as you can see. Pound yen, maybe if this 4-hour candle closes bullish, right? But otherwise, at break even for a target there. Dollar CAD at reducing the risk on that pending of yesterday, and I guess that's about it. I think we discussed everything. Euro pound, a break, perhaps a resistance, right? But for trades today, I think Aussie and Kiwi makes sense. Yesterday, pound yen is at 0 and let's see. Dollar CAD, reduced risk, let's see. Dollar yen, nothing. Maybe euro dollar pound USD, but spaces are tight. Kiwi maybe rejection, Aussie yen maybe rejection for downside, euro pound maybe upside break, but I'm not a big fan of the euro pound. Odd yen here at these resistance fibs. Yeah, that's my 2 cents. I think that's the summary I would say for today, the 3rd of February. Thanks for joining. Don't miss our webinars tonight, and it's going to take a look at lower time frames, part 2. Then tomorrow we're going to take a look at part 1 of how to scale in and out, and then next week is part 2. We also have a lot of fundamental analysis you can find, and I think that this week will be plenty of stuff added to that because of the news events we'll see tomorrow and Friday. And once again, if you're interested in MetaTrader 4 Supreme Edition, you can find that by going to trading platforms and clicking on this button, and you'll see some explanations about some of the features here. Thanks for joining. Wish you all good trading and hope to see you soon. Cheers.